And the reason I say this, Joe, is because let's just give this as an example. Let's say, uh, I want to give you losing examples because it just helps. Let's just say, okay, let's say this flips bullish, right? So the theory is bottom wick, flip bullish. Let's buy the market. We buy the market and we get stopped out break even. Yeah.
Mm.
But then on the next candle, price goes bearish. We don't have, let's just say, no, I want to lose again. Let's say it starts to go bearish, it creates a top, we flip bearish, we sell it here, which we wouldn't, but you know what I mean. We sell it here and we get stopped out break even. That's true. Two trades we've taken with the same chain of thought, both are break even trades. But we continue to maintain that and we see it happen again. This time round, it's create a top wick, flip bearish, is a nice pullback, there's a deviation, great pattern. We take this trade and we win this at 2R. Now, what is working for us? Well, the first thing that's working for us is our thought process. We're keeping it as simple as anything. And then the second thing that's working for us is the heavy lifting that our risk to reward is doing for us.
Yep.
Now, when it comes to challenges, it's not about um, whether you win a trade or not, to be frank. It's about whether you get to that profit target of 8 or 10% to pass that challenge. Now, if it meant that you lose two trades in a row, three trades in a row, but you maintain that thought process with conviction and a strong belief system, and you manage them well, you get lots of break evens, you take the ad hoc or more losses than you do wins. But when you do win, you're able to not only follow the process, but maximize your reward, which is doing the heavy lifting, and you start getting closer to your intended target. Isn't that just going to be favorable for you, period? Even if it takes you 2, 3, 4 weeks to get there.
Yes.
Yeah. Versus trying to, and I'm not saying this is you, but I'm just saying trying to be overly, um, what's the word? Trying to be overly, the word is smart and saying, right, that's the bearish candle. It's going to come back to 50%. And because the market has failed to break this high, it can come back down to this range. And because there's a big enough pullback, then we can do this and do this, etc., etc. Let me take this trade versus saying, do you know what? Let's create a bottom wick. The overall sentiment in the market is bullish. I can see the rejection of the previous candle, which is massive rejection. If it breaks this high, then because it is bullish, because of the rejection, because of the sentiment on the 1 minute time frame is trending bullish, I believe once it breaks this high that it will close bullish, and that's it. Maintain that.
Yeah, I'm trying to anticipate what's going to happen next rather than following the market.
Yeah, exactly. Now,
Yeah.
anticipating is not wrong. That's what you want to be doing. But you, let's just say, like in copywriting, in business, yeah, you know what copywriting is.
Yeah.
Yeah. So the best copywriters in the world say when you write copy, make sure that that copy is of the reading comprehension of a 7-year-old. Because one, people don't have the attention span because of social media. People constantly scrolling left, right, left, right. So they're looking for dopamine hit from anything that can excite them for 2 minutes. All right.
Mm.
So because people's brain are wired that way now, the attention span is much less. If you write copy that is absolutely incredible with all these articulate words and different, analogies and phrases, etc., for most people, the comprehension of understanding that is zero to none. So the best copy, even though it might sound dumb when reading it, is actually better than trying to overcomplicate it or make it sound too smart. So the best copywriters in the world say, dumb it down to a reading comprehension of a seventh grade, right? Because once you do that, then people can easily understand what it is that you're trying to convey to them. They get the picture, they can imagine the picture, and then they may, take the next steps to, I don't know, buy the product or service or whatever it may be. When it comes to trading, the only reason why we have overly complicated ways of thinking is because of our past results. And our past results have inflicted so much emotional, mental, and maybe even physical trauma on us that what we try to do as traders is avoid the worst case scenario by being overly ambitious with our analysis, as opposed to just saying, well, look, the anatomy of a candle formation is wick first, body next. The previous candle has closed bearish, granted, but I see the wick rejection off of this. So because of that reason, I am saying that the bearish sentiment is depleting. If it creates a bottom wick and flips bullish, then the bullish sentiment is stepping in the market. And in its simplest form, with all of that la di da that I've just said, plus the 1 minute structure is bullish and the trend should continue bullish because the trend is your friend and there's a higher low, there's a deviation, there's a failure to break the low, there's a close proximity pattern, you know, close proximity deviation, a small range pattern. All of that simply is conveyed into one thing, Joe. That is wick first, body next, bullish candle, will close bullish.
Yeah.
And that's it. Right. So when we keep it that simple, yes, we may take this trade, we get triggered into the trade, and we may lose the trade. That's fine. But what happens when you say, right, wick first, body next, flip bearish, close bearish? Did that trade win on the hourly?
Yeah.
If we say wick first, body next, close bullish, did that trade win? And
Uh,
so on and so forth.
yeah.
Now, the heavy lifting is the 2R, the 3R, the 4R that we can gain from these two candles versus if this stops us out, it is what? Just a 1R loss. So the most important thing is we maintain that streamlined thought process and just continually, religiously execute those trades as simple as we possibly can. Because a decision that we make when it's very simple is very easy to accept the outcome versus a decision where we start to, right, price is pushed bearish. I need a bigger pullback to reset the structure. Once it invalidates the downtrend and resets, creates a close proximity deviations with a small range pattern. And then the previous candle fails to break the structural high, and we've got range back down to the low. Even though that's all true in terms of the thought process, when that loses, it hurts more because you feel like you had everything that you needed to validate the trade idea, but it lost. And
Yeah.
then the trades that you say, right, I know this is going down, but it just is too simple to even just assume that it's going down, even though I know it's going down. What happens? You never take that trade, it goes down, and then you end up saying to yourself, oh, I knew it was going to go down. And then you look for another trade and you overanalyze it to get yourself into that trade. You take it and it loses. What you're doing here is you're just playing Russian roulette with your emotional state.
Yeah.
That's all you're doing. And you're hijacking your thought process that ultimately will allow you to be consistent long term, right? And then it just becomes a vicious cycle. So that's how we want to that's what we want to go back to, bro. And that is what you are best at doing. And even if that means, you know what, for me to do that, I'm going to minimize my risk or I'm going to manage more aggressively or I don't know, whatever floats your boat in order for you to be able to do that. We need to get back to that place again. And then once we get back to that place again, that's when you're going to start to see you going from that that break even mark to that 6% mark and beyond, as opposed to getting there 4 times and then back to break even. Because it's not a coincidence.
No, it's not.
Yeah. So there is something that is obviously doing that. Now, I could stick this straight on psychology. I can stick this straight on emotional instability. I can stick this straight on lack of discipline, but I don't believe that's true in your case. What I do believe in your case is we just need to go back to the simplicity of how we trade. And that is one single candle will close bullish or bearish today. Any outcome that doesn't close bullish or bearish in my favor is either a loss or a break even trade. And because I don't need to pass today as much as I would like to, I'm prepared to stick at this for the next 2, 3, 4 weeks, however long it takes until I pass, because that's my ultimate goal and aim.
Yep.
And that is it. Now, I don't know if it will help by you trading less pairs. I don't know if it will help by you trading more pairs. I don't know if it will help you trading with less risk or more risk. Maybe going for a bigger risk reward ratio or less risk reward ratio. You should know that by now through all the journaling you've done, all the tweaking and removing, adding, doubling down. You should know that. But if anything, just get back to the core belief that a candle has to close bullish or bearish. Like even an instance like this, right? We've said it. Rejection, bottom wick, flip bullish. Once it's bullish, it will close bullish in line with the uptrend. And you take the trade. Now you're in this trade, even if you just go break even at this point and you get stopped out break even, who cares? Because on the next hourly candle, let's say you go over to UCAD because the structure is more clearer, you do the same thing. You follow through the process without allowing it to influence how you feel or think because of the immediate result. And that trade flies to 5R. Are you going to be, are you really going to be upset that this went to break even?